as a conservative investor, it is important that I know what causes a crash.
It's the worst day on Wall Street since the crash of 1987.
And what should I expect to be the signs of a crash so that I can pull out my money before it happens? What happened in the markets that caused a global recession?
We've had an 8-day losing streak in the Dow that in percentage terms puts it on par, close to the loss suffered in that crash in 1987, close to that percentage loss those 2 days in 1929.
That made investors lose money, that made millions of people lose their job, global financial institutions to lose their money, ordinary investors like you and I to lose their life savings.
Across all of the major technology sectors, Apple's under pressure, Yahoo down 8.5%, Cisco 6.5%. Research.
What happened in the dot-com bubble? What happened in 2008 that caused the stock market to crash and eventually lead to a global recession? Being a very conservative investor, one thing I look back on before investing in any stock is I check what has happened in the past. I search what has happened in the past and what can I learn from that. What are the things I'm supposed to mark out so that they do not repeat themselves, or if they're going to repeat themselves, what are the key signs I'm supposed to be aware of so that I do not fall prey or become a victim. Globally, there are 3 stock market crash. The one in 1929, I wasn't born then. The one in 2000 and the one in 2008. Looking back at the dot-com bubble, from my research, one thing I would say for sure is that the biggest problem they had in the early 2000s came from the fact that there was a lot of speculative investments. Yes, investors poured money into the internet startups with hopes to revolutionize the economy. Okay, back then when .com, the website, was the new thing, most internet companies, most internet startups were now the new Nvidia. If you get where I'm going with this, they were now the new tech stocks, and because of the hype around it, most investors bought these companies without understanding the fair value of the company. Most investors poured money into these stocks that were already overvalued due to the hype and sentiment of the market. Remember, the stock market is highly sentimental. The IPO frenzy, companies went public with a highly inflated valuation. The interest rate back then was low, so it made it possible for both investors and companies to borrow money to fund the startups. A lot of money was in circulation back then. This big bubble led to the crash of many internet companies in the late 2000s. Now, if you want to learn how to evaluate stock, give you the best return on your investment, click on the link below and join the Stock Master class with Crystal. It's 10,000 naira. See you in class. Bye.